What's up, everybody? Hope you had a great week. I had a very good week. Now, that wasn't the case during my FOMC live stream. Fortunately, Amer was there for me to rage out on him. He's good to take it. Hey, what's up, TradingView? Thanks for joining me. Thanks for spending this Friday afternoon. What an interesting market we've got going on, huh? Like average January performance, I think, is 0.83% historically, and we had a very, very bullish January to start this 2023. Let me just go ahead and jump over to my normal charts. Let's talk about it. So if you're just joining, it's your first time, I like to do a market recap in the very beginning, and then I like to segue into a conversational topic. The topic for today is real estate prices, because I've been doing a little bit of research for my own decision-making process. I want to know when's going to be a good time to buy real estate. This is going to be my analysis. This is what I'm going to use for discipline. I'm a chartist, and so I'm going to be using the Case-Shiller Index for that purpose. And so that's what I want to talk about today. I want to talk about how I make sense of these lines right here, okay? And what that's going to tell me about real estate going forward, when I want to potentially pick up an investment property. Maybe this can help people too if you're thinking about the same thing. But first, markets. And just as I said, the month of January, is the dead cat bounce over? You call it a dead cat bounce? Interesting. You know, I wish that we could do a poll in chat or on TradingView, because maybe I'll do it on Discord, which, by the way, I run a Discord. The link is down below. I don't charge for it. I just have a trading community. I post all my trades live on there. I don't trade every day. I use very, very patient discretionary trades, but I want to hear what you guys have to say as too. I want to break that fourth wall and get ideas, because I frankly can't watch every single instrument out there. There was a trade yesterday at 5 p.m., the daily bar close on Euro USD, and I missed it. I'm very frustrated, and I'm going to redo my Discord alert system. I have TradingView alerts, which, thank you, TradingView. You guys are awesome. I have those piped in via webhooks, and that's for me, but I share them to people that may be interested. These are the spike alerts that I like to look for. Let me just talk about that off the top of the hour. And Euro USD. Let's go to FXCM. So let me just clear everything up here. So the two things that I trust, not Ichimoku. I used to trust that. It's kind of like down on the list. It's like the little asterisk 3 thing I trust. But the number one thing I trust is 50% retracement levels to trends. And the number 2 thing I trust is spikes. That is price volatility, when price shoots up or down and then closes back inside the support or resistance that it was breaking. That's what I trust. That's what I base pretty much all of my trading on. And I've been watching the DXY, which has pulled back to 102, which is the 50% of the whole 2020-21 up to the 2022 high. Dollar yen, same thing, looks exactly the same. Also pulled back perfectly to 127.32 and a half, or 127, whatever, 127. But that Forex trade worked out really well. That was a spike on the daily back in October, all the way back down here. Been talking about just about every week. And it's coming off of that level. And so Eurodollar was being very interesting going into the last few weeks, because we were pushing up against that 50%, that 1.09 euro versus dollar. By the way, crypto stocks, bonds, they do not even come close to the liquidity of the Forex markets. This instrument right here, euro dollar, has more money flowing into it than all of those things combined. And it has pulled back to a 50% retracement level. And why I've redone, or I'm going to redo this weekend, my alert system is because I get so many alerts that I missed this one. There's a spike. Basically, price shot on the euro dollar up above that 109 level, and then closed right back below it. And with this move down that we've had in the risk markets, euro dollar is following suit. So key resistance. And I saw this a little bit later in the morning, which is why I posted on Discord that, hey, if you guys have your portfolios, if your portfolios are really doing well right now, because hey, look, everybody had a bad 2022 unless you had cash. Well, and this month has been absolutely amazing for a lot of people's portfolios. And then today I was reading, some of my friends chatting, and everybody was just, can I say it, Jen? Self-filleting each other about how great your portfolios are. And that really, really kicked off my spidey senses, because that's the point of maximum emotion. When you feel like you're really bad and you're down because the position is down, you're in a trade and it's just really, oh man, it's just at a huge loss. Like, it feels so bad. And like, maybe you get liquidated if you're trading on margin on crypto or something like that. And then it just reverses right off of that. That's because that was a point of maximum despair. The same thing is the case at the point of maximum elation, happiness. If you're happy with what your performance is, if you're happy with your position, chances are everyone else is too. And that is the moment when you got to be fearful, when you're feeling greedy. And that was around 11:30 today, which that's why I marked it off here on my my chart right here. 11:30, for those that don't know, is right the time where Europe and London go home. They go offline. It doesn't happen every day. But if you watch at 11:30, trading this morning, I caught the bottom right at the open on NASDAQ, which made up for Wednesday, which I may or may not talk about. But 11:30 is when you very often see inflection in the market. If you got a trend that's going all morning during day trading, and you know what? I bet if we even look on cryptocurrency, we're going to see that too. 11:30, boom, right there. The high for the day on Bitcoin, 11:30 a.m. Ethereum, boom, 11:30, boom. That's when it rolled over. These are all correlated, by the way, now, because they're all looking at interest rates. But this is just to show you this is not just a stock phenomenon. No matter what you trade, be aware of 11:30 in the morning. Not every morning, but think about it this way. You've got all these traders, institutions in a whole continent trading up until a certain point, and then they go home. It's a Friday too, so they're going home for the weekend. So common to look at that. And the reason this really came into play today for me is because as this trend that I got in on the bottom here started trending up, the question becomes, okay, well, when do I want to take some profit? I know I don't want to carry futures trade through the weekend. You got a high up here, the spike here. You got a lot of junk. I don't know where, but you know what? 11:30 is a timing element. So rather than look for price, look for that time for a certain inflection. So that's a little tip for you. All right. So yeah, and plus euro dollar, the dollar is getting up to a resistance level. Let's jump through the instruments, and I'm going to do a little market update on them. And then, by the way, if you have any questions, if you guys have any things you want me to look at, any symbols, post them into the chat. I want to hear them. I want you guys to tell me what you're looking at, because, like I said, this was actually pointed out to me by a friend. He said, "Hey, that euro dollar, it spiked out." I was like, "What? Did?" And I looked, and yes, because I was out working on a little fun project of mine. Actually, I was sitting in traffic at 5 p.m. yesterday, and I didn't see it. And so that's why I like to have a community of traders to share ideas with, get ideas from, and hold me accountable as well. And that's why I don't sell classes or anything like that. I don't need your money. But I do want your help. And I want to help you. I want to share what I know. I want to share the experience that I have from 10 years. That's all I want to do. So link below. Come hang out. All right, let me read some comments as we're going into this. We're streaming on YouTube, TradingView, and Discord. I'm thinking about starting to stream on Rumble. I may start going over there. I would like to be the top trading streamer on Rumble, because I think I could probably master that market a little bit. All right, let's see. Is the dead count bounce over? What do you think, Peter? You liked my Ethereum top two, didn't you? Ethereum is also doing something very interesting. That was this spike from a 2 hour. That was from earlier. That was yesterday, yesterday afternoon. So far, it's holding. Ethereum. Let's just jump into crypto. These are the amazing things. Ethereum. Why I like this one, this spike is because it's happening at the November 4th high. What happened on November 4th? Well, it was right before the FTX collapse. So that high is critical to Ethereum. And I'm not saying it's over. We've had a nice little bull run. At some point, it'll do a pullback, and that's what I'm looking for. I'd really like to see Ethereum pull back to somewhere the 50% of this level, maybe 1394, 1400. Let's call it. Okay, Bitcoin. It also did a spike out as above it too. We've got this consolidation pattern that's been fighting. Not at the November the 5th high, but rather the September high. Overall, and this is what I was doing some homework on before we came in here, this is bullish. Price is trending above the Ichimoku cloud on the daily. So crypto's in a bullish trend. It just is. Do I think it's going to get to the all-time high this year or this run? I do not. And I laid out that thesis last week. The short version of it is you don't have the same fundamental factors. You don't have 0% credit, and nobody has cash. You look at the savings rate for the United States, and it's back down at historical lows. Nobody has cash to throw into risky stuff anymore. And I just got a notification that you can find a savings rate, a savings account rate, just sitting your money there risk-free for 4.05%. Now, 4% is like, it's just 4%. But, I mean, it used to be 0, and now it's 4%. Average inflation is about right there, about 4%, and the Fed's target rate is 2%. Now, I know a lot of my friends, they are convinced that 7% is the new inflation rate because that's what it is right now. But inflation is a trend just like anything else. And so you need to be careful assuming that what is presently the case is going to continue. We'll see. But I'm just one to always discount FUD whenever I can. But short version, crypto, bullish, could be doing a pullback at resistance. That's the short version. All right, let's see here. Crude oil looking scary. What does scary mean, Option Farmer? What does scary mean? There was actually Amer. Is Amer in the chat? Where's Amer? Amer's not in the chat right now, but he has squirreled his way over to crude oil futures. And yes, we were looking at this earlier this week. And let me take off Ichimoku right here. So again, 50% retracements, works in any instrument, from the November high down to the low in December. Let me just clean it up. Let's just start from scratch. From the November high to the December low, we have this month, January, back in January, we're already in the second month of 2023, really came up and knocked against that resistance there, 81.91 on oil. So once it did that, held, you had a really good shot of coming back down to retest these lows. And then intra-week, in the middle of the week this week, there was also on the 30-minute, where was it? Yeah. So I think he was able to capture this during his trading time because he's in London or close to London. But yeah, you had let's just jump back to it. So knowing that you're coming off of 81.91, this was on Tuesday of this week. Again, you have from the high that it hit the resistance. So by the way, whenever something hits a big resistance, like this, whoa, Trey, we don't slow down. Whenever something hits a big resistance and it runs away from it, don't get discouraged and pissy like I do about the euro dollar, which to that point, I'm going to keep watching it. But you know that it's holding a higher time frame setup. And therefore, when you see a setup happen later, after you know that, okay, we're holding a big resistance up here, we could be trending bearish. look for that other opportunity. And so it set up a 50% of this downtrend off that resistance. And that earlier this week ended up being a really good resistance for him. I personally don't watch crude oil. So thank you, Option. That's why I'm glad you're here to point that out. Just like Amer was pointing out. But yeah, holding that resistance, had a little run up, was it this morning? Yeah, with the rest of the risk markets. They're not exactly correlated, but I mean, it's moving about the same way. So yeah, right now, what are we doing? Well, I would say I wouldn't want to go short now because we're already kind of coming up close to, these lows. The money to be made was definitely in this area, but you could see a little more downside to retest these lows on oil. That's for sure. Gasoline, diesel, and copper. Well, when were you telling me that, those are things I don't usually look at. I haven't looked at copper in a long time, but still looks kind of bullish. I mean, you might be getting some kind of little inversion here. I mean, being the contrarian that I am, I'd be more likely to short copper. That's for sure. Ed, if you look at DXY going up, you'll see the DJI, SPX, and Q go down or mirror image. That's a good, accurate observation. When I first started cutting my teeth over a decade ago, that was one of the things that you would kind of assume was going to be correlated, would be dollar and stocks. In other words, when stocks go down, it's considered risk off, and dollars would go up. And sort of the mental work that you would do on that is, as people sell their stocks, they are getting dollars for U.S. stocks. And so you'd have that kind of inverse relationship. And so, yeah. So there's that is a very historical inverse correlation. Yes, indeed. 10-year treasuries, of course, I've been talking about this since the beginning of the year. I don't really watch the 10-year. I probably should be looking at the 10-year. I mean, this is the 30-year that I have on my watch list because I am, TLT is my big boring trade of the year because as interest rates go up, you can actually get a decent return on long-term bonds. I think they're going to recover. I mean, you got to bear in mind that bonds are at 12-year lows. They're back where they were in October. They hit in October. They're coming off of 12-year lows. And so, though I don't expect this to be a big YOLO, unless you're doing some options, which you can, then I really think that this is going to be the solid trade of 2023 is bonds. I do. What is Treasury bond? What's the 10-year Treasury bond, Ed? What is that? I like BitChute, but uploading problems. Oh, Ulta. Hold on, Chinton. I'll look at some individual stuff. Let me just recap real quick about the stock market, and then we'll take a look at that. So let's finish up by looking at the ES, which I use for SPY, the S&P index. I use this because this is what I trade. So info line, where's the beginning of the month? So January 3rd, we open here, and we closed January up 5%, just about 5%. Good stuff. Is that what the SPY did too? Is the ES not a classic higher high, higher low scenario? Hold on. I want to talk about that, what it's doing. So we'll look at the SPY, which SPY opened there and closed here, 5.75%, just about the same. So 5%. 5% January is very big. It may not seem that way because of how much volatility we've had, but Boomer Me is thinking about the times in the past where you had, in 2013, a 5% move was all that you would get in maybe, you could probably get that about a month or two in 2013. It was really in 2017 where things got really, really choppy. But anyway, that's long, long ago. We're in a new market now. So the thing I like about this level, and let's just clean this up a little bit. I'll just start over. So on the daily, S&P 500, I don't know if people noticed it or not, but it came down to touch its 50% from the COVID low to the all-time high back in October. And what happened there on this CPI report, you had a spike. You had a spike. And like I said, there's two things I trust, 50% and spikes. And that October jobs report was what really, really kicked off this bull trend that we had, because the fundamentals there were, okay, inflation is starting to come down. The Fed is doing what they're supposed to be doing. They're going to get it under control. They're not going to need to raise rates as fast because inflation's coming down. That means bull. That means go. And then in December, you had another CPI report which showed, what was it? I think it actually, was it a tick up? I'm forgetting now. But anyway, it did a spike at another 50% level here, okay? And what that 50% level was measuring was from that October low all the way back up to that all-time high. And so for the longest time, from December CPI report, that high on the stock market has been the one I've been looking for. And what we had yesterday was a close above it. Very, very important. But I really wanted to see, just like if I was taking a trade, just as if I was using this indicator, which my spike indicator basically is, it measures an ATR above that high. And it did touch it. And so I really want to see next week come up and give us a little bit more bull, a little more of a closing green bar above this level to really start jumping towards this, okay? But, I mean, the signs are there. The signs are there, actually, that we've broken that December high, which was really going to be the defining spike. We've broken it. NASDAQ is the same. NASDAQ has come to a 50%, not the 50%, not the all-time high to the all-time low, but if you look from the March high down to the low, again, another spike on the October news report. It broke the December high it made Wednesday. Wednesday it did. By the way, little tip, if you're going to trade things bullish or bearish in terms of either SPYs or Qs or ES or NQ, what you want to do is you want to go long the ES backwards. Go long NASDAQ, short ES. In other words, if you see a setup, I've talked about this just about every week because it's really important. Last year was the opposite. What is happening is on an intraday basis, or in the case of the daily right here, notice how it wasn't until today that the S&P 500 it wasn't until yesterday, Thursday, that the S&P 500 broke its resistance, whereas a day before it, the NASDAQ broke its resistance. So in other words, the NASDAQ is breaking its resistances first and more thoroughly, whereas the S&P 500 is coming up to its resistances and holding them. So you want to trade the strongest instrument in the strongest direction. This was the opposite last year. And the opposite last year because tech was getting so hurt, tech was getting so beat down, the NASDAQ was the thing that you wanted to short, and the S&P 500 was the thing that you wanted to go long. So what I do on a day-to-day basis, I'm looking at the ES and I'm looking at the NASDAQ. I don't have time to look at anything else. In fact, I sometimes miss stuff in those because I'm looking at lots of other things. I need maybe 3 more monitors. But if I see a setup, and if it's a short setup, I want to take in the ES. If it's a long setup, I want to take in the NASDAQ because you're going to get more bang for your buck that way. Again, wasn't the way in 2022, but this is the way it is this year. And that's what I'm telling you guys, because this is something I noticed being down in the trenches and trading every day. NASDAQ, though, it has broken its December high. It's pushing up against a resistance. Fun fact, that daily level, that 12,876 level that I have marked off, that was what it hit right at 11:30 today. It kissed that level. That's why you got to draw these long-term levels, because even on a day trading time frame, you can still find an opportunity like that. So the other thing, VIX. VIX is the measure of, okay, timing the market. You can't time the market, they say. Okay, well, okay, sure. Okay, boomer. The VIX back in March, when it hit the 1920 area, that was the March high, and we went down from there. And then this was the August high, again, 1920 area, and then the December high. So 3 times last year, this zone of VIX, which is implied volatility of the S&P 500 index futures, this has been a key level. And actually now, as I look at this just now, I've been watching it. You saw I had these notations from last either the live stream Wednesday or the live stream last week. It's been holding, to not get back up, not go bearish. And now what do you see? You see that this week on Wednesday, it came down, pulled back, and held this zone as resistance. Market's going up. Market's going up. All the signs are there. If I'm wrong, I'm wrong, but the market's going up. This is what I have been studying for years, and yeah, I'll just say it. I'm not going to hedge it. All the signs are there. All the signs are there. So, yeah. So even though we had this crazy kind of day here, it's really kind of a blow off from the FOMC. It really is. People are basically just pricing in that the Fed is going to do what they're going to do. The jobs report today was what really created all this volatility because, wow, I mean, it really blew out of the water people's expectations for, let's see, let me bring up the calendar here. So the jobs report this morning, it was expected that the economy would only add 193,000 jobs, but instead it blew it out of the water with 517K. It was expected that unemployment would go up. Instead, unemployment went down. So we've been in kind of a weird scenario for the last several quarters about how the stock market and how crypto, how everything responds to economic news. Bad news is good for the market. Good news is bad for the market because of what people are looking at with the Fed. I think now that the economy is showing signs of being good and inflation is showing signs of going down. Oh, when's the next CPI? I think that people are basically pricing in normal. I think people are pricing in return to normal. It depends on who you ask. If you ask some really fuddy people that constantly think the sky is falling, they're going to say this is all cooked, it's all BS, and the world is actually ending. But the data's not there. The data's not there to show it. So we're going to have CPI, that's PPI. Okay, CPI is coming the week of Valentine's Day, February the 14th. And then we're going to have a lot of economic news that week. So what do we got coming up next week? Jay Powell's going to talk at noon on Tuesday. Going to have some... Okay, that's going to be... That'll be interesting to see what happens. Hard to kind of trade that, though. They tend to talk and the market moves, and then when they stop talking, the market moves the other way. So, all right, let me catch up with chat. Ulta. We wanted to look at Ulta. By the way, if you have questions, take down that fourth wall, post them in chat. I like answering you guys' questions. I like looking at stuff you guys are looking at. The reason I do this, the reason I run my Discord is just to have a community so that people can call out things. I mean, I can't look at everything. Someone called out IBM, and that's a really good trade that we got into last week. Yes. Gave a little scare on Wednesday, but this is a trade on IBM that was called out by a member on Discord. I liked it. I took options in it because IV is cheap and it's coming off this 50% retracement level, which, that makes me feel so good that, when I speak about my techniques, people are able to use them to find opportunities for themselves and others. So, Jen, can you look up who that was so we can give a shout out to him? Because I know that he posted it in mine. You and I both are in this. This is looking pretty good. The option needs to do a little bit better, but that's because implied volatility keeps going down. But Ulta, let's take a look at Ulta. If you've got things, if you see something at 50% level, call them out. Just reach out to me on a DM if you need to. If you're too nervous to put it in, yeah. All right, Ulta, 4 hour and 1 day. This is going up. It's bullish. I've been thinking about this. The Becky index, for those that don't know, is this Reddit meme from when was the Becky index inception? Becky index. This was the old Wall Street bets when they actually did good research and DD. So Becky was this meme of indexing stuff that women buy, because as we should know, women drive consumer spending. They're also, in the Zoomer generation especially, but millennials and Zoomers are out earning men. I know, surprise, surprise, wage gap. Well, the wage gap's the other way because they're graduating from college a lot more. They're earning more than men. And so into the future, it's going to be pretty obvious that women are going to control spending. And where are they going to spend it? Well, in companies they like. And one of the things for sure on the Becky index is Ulta. You can see it right here. Now, these all got hit really, really hard in 2022 because the Becky index really took a hit in 2022. Ulta didn't. Look at this. I am remiss that I have not been consistently looking at. Thank you. Thank you, Chintan. Thank you, Chintan. I'm making a note. We need to go back and look at the Becky index. The time has come again. In fact, the time was never not to look at it. If you look at it as a long-term investment strategy, yeah. I think the reason the Becky index really got hurt was because people put Netflix into that Becky index as well as Facebook. I don't think those are necessarily plays. But I think that, yeah, let's see. So on Discord, Cornell gets a big shout out. And I'm going to bump him up to our smart money rank. What do you have to do to be smart money? Well, share ideas. Nice. Okay. I like IBM. That's good. That's a good trade. As long as it's winning, it's good. If it starts going the other way, I'm going to be mad. No, not really. All right. Let's see here. PayPal at a 50%. Wizzo, PayPal at a 50% from August high to low. Just to recap, to jump around, I think that we need to go back and do some research on the Becky index and focus on female consumer spending instead of Netflix and things like that. I think those are a little bit, you're going to get great gains from it, obviously, because it's tech in the future, ideally. But I think things like Ulta and what were the other ones in it? I already lost it. That's for me to research. This could be a good little research project. So PayPal at the 50% of the August high. What I will say as a general rule, actually, it's already broken it. You already opened above it, Wizzo. I would actually be looking for the big 50% of this whole entire downtrend, around 188 as a resistance. We're definitely coming off of lows, but man, whew, what a fall. Let's catch up. I like BitChute, but uploading problems. If you like Bill Cooper, check out my BitChute Ed 209. I'll make a note of that. I'm trying not to overload myself on stuff. Yeah, Etsy is definitely the Becky index. That's another tech stock that got hurt, but it is 100% Etsy. In fact, Etsy was one of the key things that I really liked in the Becky Index because I had a friend, a female friend, that said, and my ears perked up, I spend 4 hours a day on Etsy. Or was it Etsy? Yeah, and then there's Pinterest was the other one. These are ones that definitely got hurt by the whole tech sell-off, but they definitely belong in the Becky Index. Definitely belong in the Becky Index. It's a tech thing. It's a tech company, though. I mean, back all the way to his IPO price. Don't buy IPOs. We're going to get into a bull market again one of these days. Don't buy IPOs. Stop it. Stop it. They only bring companies to market to take your money. You're not, they don't, when the time comes, I'll rant about that. Can you check NVIDIA? NVIDIA is actually a short hedge that I have on right now, believe it or not. They've got earnings coming up. And before this little rally that we had, I took a put credit spread because IV was still pretty high. And it's obviously not doing very well, but all my other stocks are doing well. So as we were coming up to this resistance, when NVIDIA was coming up to its December high, this was back about a week or two ago, I put this on along with some other bearish options, some puts. And of course, they're not doing very well, but that's fine because we don't know the future. But those were a hedge. But I still have on that NVIDIA put spread through earnings. Let's see, what do I have for that? I've got the March 175, 165. So yeah, it's bullish. It's obviously bullish, but I'm on the side of it going bearish, actually. And if I was going to chart it, basically from this big trend down from the March high, and we're still pushing above it. So I don't think I'm going to win. So hopefully you're long NVIDIA. Let's see. ENPH. In-phase energy. I actually own some of this from 2020 when I was trading on an old Discord with my friend Dylan, who has since left the online Discord trading world. He's still around, but he got me into this. He recommended it. I'm like, yeah, sure, why not? Energy. And so I've been in this for quite some time. Let's see, Yahoo Finance. I haven't added to it, but I have had, I'm looking up the dividend yield right now. ENPH. Okay, wait. They don't have a dividend. Am I thinking about something else? I do remember this stock, but let's see. Let's do a chart for you. So from the low of last January up to, looks like the all-time high, you are fighting against that level right there. I'm actually not mad at you if you take this as maybe the first sign that it's possibly holding. But at the same time, you do have it kind of going down here and doing this. This is a dangerous point for it. So far, it's not respecting that level. It's definitely getting brought down by energy stocks right now. So on second thought, don't let it break the low of 200. Don't let it do that. All right. Let's see. You think they're putting a bottom in on oil before they drive it up again? Yeah. All right, amateur. Let's look at Tesla. So Tesla, I know some people want to talk about Tesla. So Tesla's been very interesting. A lot of my friends, not me, because I guess I'm an Elon doubter, have been making a lot of money on Tesla these last few weeks. A lot of people caught the bottom. A lot of my smart friends, smarter than me, caught the bottom, and I'm happy for them. I've got this charted up for you, though. 207 is what you need to be looking at. If you're, things have been going really, really, really crazy with Tesla, and if you own shares, which I know some of you do, selling premium on Tesla is very, very attractive rather than taking profits because it's Tesla. It's very, very high. Still very high. In fact, let me do a little check right here. Let me pull up Thinkorswim. By the way, thank you guys for giving me things to look at. This makes it exciting for me. I like talking to you guys. I can't look at everything. And if you're making money on something and I'm not, then you can just rub it in my face. But at least make me aware of it. So, Tesla, the reason I got to bring up Thinkorswim is because Thinkorswim actually has implied volatility. This is a little indicator down here that I drew to make it color-coded. What was very interesting to me was on Friday, January 27th, when it came up here, implied volatility actually got up above average. It was a really good opportunity to sell premium, even though price has continued to go up. The one that me and a friend were looking at was the 230 options for March. Now, this is a friend that I love very much, but he, like a lot of you, didn't know what monthly options were. And he'd only been selling weekly options. And I had to show him, you know what? If you just do monthly expiration options, like go out to March instead of next week, you can get a lot of premium. Yes, you'll have to wait. But if you actually get this option in the money, if you're doing a covered call, you can roll it for more credit. You have options when you give yourself more time. Don't get too greedy. Capture some of this premium. Okay, so the 230 March calls, I think, were on this day they got up to about 550. Right now, they are up to 650, let's call it. But what was interesting was on Wednesday of this week, even though price had gone up higher than Friday, the options were actually down to 350. That shows you just what kind of variability there is based on volatility. Now what's happened, you can see. And the reason you were able to get 550 on this day and only 350 on Wednesday on this particular option, a whole difference of $200, is because the implied volatility was so high on Friday and then it dipped down on Wednesday this week. But now you see something very interesting happening. People are starting to take notice. Those YOLO option traders are coming back, and they are pushing the prices because they want to buy them. They're pushing the prices up on options, which, again, if you are wanting to sell some premium, if you have shares and you want to hedge, very good opportunity to sell some of the premium because, I mean, come on. Yes, Elon is definitely going to win anything he puts his hand at, but Tesla does have a tendency to go up and down. If you do, for some reason, get 230 before March, before it gets there, you can roll it. If you want to talk about this, if you do get yourself into this, we can maybe take some time, do a session on Discord talking about how to do that, okay? So don't be afraid of getting your shares called away. You can just roll the option. It's a very standard strategy. We'll talk about it if you need it. But, yeah, Tesla. All right, Palantir. Palantir is officially bullish. Now, I've been copy trading with some friends in Palantir. I don't know why I'm in this stock. People tell me it's the future. That's fine. I can let some cash ride on it. I have a very, very long dated call. I think I have the January 2024 10 calls. And so I'm very happy to see it finally start to get back up to 10. You had a little false breakout in August, but then this recent breakout above the daily Ichimoku cloud, let me just switch back to TradingView. This does tell me, and we even have a spike. That was that Tuesday last week, crazy NYSE issue they had. You do finally have this trending on the daily back up, which is good. Finally, things have started to roll over. You got earnings coming up, so volatility is going forward. Don't gamble on earnings options. Please don't. But I know you're going to anyway. It's bullish. Finally, it is bullish. Maybe we'll see me get back some of this money that I have lost on this. Yes. Hold on. I don't ignore you, Jen. I just know that I can talk to you anytime. All right. So Cody, okay, so those are the Becky index. We need to go through and actually make the Becky index. That's what we actually need to do. That's what we need to do. Put it together and hell, maybe even set up an account for it. All right. Let me see if I missed anyone else in the comments. Hang on. This is a kind of a bull market sign because more and more people are tuning in. 100%. All right. Do I think it's way overextended on Ulta? I'm pausing because I try not to think in terms of oversold, overbought, because when you've been doing this for a long time, you learn that there is no such thing. And so a lot of traders will swear by buy high, sell even higher, as opposed to buy low, sell high. And so a lot of people that want to trade breakouts or own good companies, I mean, ask Warren Buffett if he thinks anything is overbought. So I don't, because I'm thinking about Ulta in terms of a long-term basket type index strategy, I really don't think it's overbought. Now, that being said, I am absolutely contrarian, sometimes to a fault. And yes, I do want to short stuff when it's gone overbought. But at this point right here, I don't see any sign on a daily chart that this is making a turnaround. What I would look for is a cross over the Ichimoku Tenkan, and then maybe a recapture to the downside, and that might be a sign for a pullback. That might be a sign. In other words, if you look back here in December of 2022, you got to close below the red line, the Tenkan, and that was a signal for a pullback. Didn't last very long. In fact, what it did was it just came back to hold the September 22 high, and then up it went. But at this point right now, you don't have any sort of sign, at least not today. And since you're pushing up to, to all-time highs, you just don't know. You just don't know. Maybe you could dig into it as a fundamental trader and tell me why it may be going down, but do I want to short something just because it's going up? Not without a technical setup that I can build some risk management around. But the way I'm looking at this is for a basket. All right. Hi, can you please check out, what's ELFES? What's that mean, Ed? Hi, can you please check Bill, BILL. Are we going to kill Bill? Bill.com Holdings. All right. So this tanked on earnings. What does Bill.com do? Is it like a finance company? I bet it is. It tanked it on earnings, but it didn't really break the low here. It didn't really break that low. The low that it set May of 2022. I mean, there's your key level. You're retesting it again, but it's not dead yet. It's not dead yet. Definitely depressed though. I mean, that's all I can really say about it. I don't even know what it does. Space, SPC, is that Virgin Galactic? Again, things have started to actually turn bullish once again. So, yeah, you finally have a bullish turn. You had the August fake out, but then now you actually have some bullish signs coming into these favorites of yesteryear. Could we see some kind of a resurgence in some of these memes? It's looking that way. I bought 10K Tesla IPO, but could not hold on. Coulda, shoulda, woulda been worth a lot. Why couldn't you hold on, Ed? Is it because you thought it was overbought? See, that's the danger of thinking about things overbought. If you're day trading, then you can think in terms of like the RSI is oversold and do short-term trades based on oversold, overbought conditions, caveat, asterisk, in a ranging market. What we've had in January up until now is a trending market. So be very, very careful. The market changes. This is why you can't program algorithms to trade, because the market changes. And where you may have a strategy that goes on overbought, oversold conditions that'll work really, really well during a period of like a month or two, in a trending market, you're going to get killed. As opposed to, let's say you have like a moving average type of strategy that is trend following, that's going to do very well in trending markets, but when you switch into a range bound market, it's going to get killed as well. You have to have both going on simultaneously, or focus yourself to a single one and know when it's not a favorable condition. So we're in a trend right now. Now that can change. We'll see. But right now we're in a trend. So trend-based strategies are going to work. Be very careful with overbought, oversold type of things. What a powerful beard. Why, thank you. It used to be even more powerful. I cut it because it was getting itchy. I was in AMD earnings early AM. After announcement, did very well. Miss Cirrus's AM. Could have done a repeat. You know what? I'm catching your vibe, Ed. You're feeling like you're missing out. You're FOMO. It's okay. Calm. Namaste. Peace be upon you. I'm the same way. This big bull run has been going on, and there's two trades that I've missed. Goldman Sachs was one where I had an alert on a Monday, January the 23rd, when it pulled back to the 50% right here. It had a spike right here. Let me clean this up. So this bugged me. This bugged me as well. This is a miss right here. I hate it, hate it, hate it. When I pull back to the 50%, 338, it was a spike. Oh, such a beautiful, but I missed it because I simply didn't hit it in time. I just didn't do that scan on Monday. I didn't do my scan on that Monday. Came back later. It had already come up to the first target, and now it's retesting the high. SYK was another one that's really bugging me, because this one was one where I got into it on the 19th, but I had an alert, but I didn't have a profit target to take profit up here. And then when it came back to break even with earnings coming up, I was still in full risk. I didn't want to take that risk. And then, of course, earnings popped it up 6%. So the fact that you're missing stuff tells you that you're in an opportunity-rich environment. That's what it should tell you. It doesn't tell you that you're bad. It doesn't tell you that it's over. What it tells you is probably next week there's going to be a lot more. So I will talk about this week. I got so pissed off on the FOMC because, let me clean it up. FOMC came out. The number came out, and this was the number. The FOMC number came out at 2 p.m. on Wednesday. Ran up. I waited patiently. Thought about taking that 50% pullback. Didn't quite like it. And then it came down to this low right here, and I was watching it on my Thinkorswim, and I put out an order at 12.071, and it didn't fill, and it ran away. I mean, it really, really hurt. It really, really hurt, and it threw me for a loop. It really threw me for a loop. If you want to go back and watch me kind of have a little meltdown on stream, you can. And it took me a good 24 hours to recover. The next day I came in and I was like, oh man, like I don't feel like trading, I'm just so woe is me, emotional. And then look what happened on Thursday. Thursday, was it what was it? Thursday, there was, okay, here's the morning. There it is. Okay. Thursday, the next day, if I had just gone to the gym, if I had just gotten a good night's sleep, and I had said, you know what, I'm still a good trader, and I had just looked for a basic 50% pullback. Because remember, what are we? Trending bullish. Wait for a pullback, a 50% level pullback. My stuff, this is what I look for. If I just waited patiently and put in an order, knowing, okay, you know what? They screwed me over yesterday. I'm cool. I'm positive. I'm even. And then that would have been a chance to catch it again. If I just not beat myself up for something completely out of my control. That's okay. I missed that too. Taught me another lesson, which I've been taught many times and I don't learn. But then today, once again, came back, looked for the, let's see, what is it? This is right here at the open. This was the setup here at the open. I actually took a loss here. I tried to capture this Tinkinson recapture right here. Why did it not work? Because we're too far away from the news event. But when it finally came back, 9:30 open, big deal, open right there. Right there at the open, did a close back above the Tinkinson after hitting that low. Boom, catch it on the Tinkinson, pull back, and ride it up until 11:30. Great week. Missed Wednesday because not my fault. Missed Thursday because I was being a little bitch. Friday, I was okay. Opportunity-rich environment. That's what we're in. So, all right. ETH BTC. I looked at that at the beginning, but I'll do a recap. Is it a good time to switch from ETH BTC? Okay, I didn't look at that chart, but let's do a little quick analysis of Ethereum versus Bitcoin. That is something I definitely watch. Now, the key level here for Ethereum Bitcoin is, okay, bear with me here, 0.067297. What is that? Well, that has been a key support from the June low on Ethereum versus Bitcoin up to the September high. And right around September and October, we came down and held it. And then on the FTX collapse, once again, you came down and held it. So this level right here has been a key support to watch. And so far, it's holding it. In other words, so far, Ethereum is remaining really kind of even at 0.07, around 0.7 to 0.8 versus Bitcoin, and not going lower. It's a very interesting and contentious thesis that Ethereum may begin to outperform Bitcoin because of use cases. And I don't say that to the Bitcoin maxis, because Bitcoin's the only cryptocurrency, right? Well, maybe. But I do still think that we're in a crypto bear market, a crypto winter, as it were. And I don't necessarily think that it's the safest thing to hold on to crypto without a hedge. And a hedge is going to come from putting it in a margin account and being able to be a little more of a trader. Some people don't want to do that. Some people just want to hold, buy and hold because they don't want to be traders. You can do better. But one thing you can do to hedge your exposure is look for these correlated pairs. In other words, these cross pairs. And keep an eye on Ethereum versus Bitcoin. If we break below the, let's call it 0.65 level, then the thesis is disproven that Ethereum is going to outperform Bitcoin. But as long as we hold it here in the short term, it is looking that way. Let's look a little bit more long term. Well, ever since 2020, ever since the start of this recent history, COVID and whatnot, Ethereum has been growing versus Bitcoin. And you can see it here on the chart as well. There's another 50% hold. Again, the two things I trust, 50% and volatility spikes. So from the low that it made in September 2019 to the high that it made in December 2021, key 50% level is 0.052. Again, every time it seems that Ethereum Bitcoin is coming to these key levels, it is holding, and Ethereum is performing better than Bitcoin. And again, boom to boom, you have another 50% hold inside this range. If you get a breakout above this range, if you get them to the 0.09, that's some serious movement as well. So for right now, your key levels to watch on Ethereum Bitcoin is going to be the 0.067 and then the 0.052. That's what I would watch for Ethereum versus Bitcoin. And you guys know that, oh, look at this. I had this marked off. I've been watching Monero versus Bitcoin. I like Monero's use case as a privacy coin. It is actually starting to come back as well to a key level in its relative price. Little interesting point. If you look at some relative performance of all these things, so Bitcoin has surpassed the FTX, pre-FTX high of November. Now it's at the September high. Ethereum is at its November high, but it hasn't got to its September high. But Monero, it has surpassed the FTX high, surpassed the September high, and it's back below, but it broke the August high as well. So the takeaway from Monero as we were in this last year of a bear market is that it outperformed Bitcoin bigly. But in this bullish cycle where crypto has been going up, Bitcoin has been going up, it has been underperforming. I still think the Monero is going to be a better store of value in a bear market. I do, because it's proven it through this last bear cycle. But we'll have to wait and see. So, all right, we're going to go a little bit long today because I wanted to talk about a particular thing. This is going to get its own video, but I'll give it an abridged version here. All right. So, let me just go ahead and ask. Does anybody guys else have anything you want to talk about? Post in the chat for me. Okay, hold on. I'm not going to ignore you, Jen. Hang on. You know what? I think I need to change your color to like something like hot pink. Do you want to be hot pink, you and Maniconda? Adam BTC, let's take a look. Cosmos Bitcoin. Well, look at that. From the June to the high, right at a 50. Yeah, it actually bounced off of it Tuesday a few weeks ago. Boom to the boom. Weekly. Yeah. Bitcoin remains the popular store of value, but it's interesting times we're in. Becky Index. So the Becky Index is just theoretical. We don't actually have a ticker that we can put in on. It may be losing its edge. Yes, Bitcoin may be losing its edge. We don't actually have a $ BEKY, but yeah, we want to make it ourselves. I actually want to. You know what? I might actually like dedicate like maybe a few grand to an account, and we just kind of manage it. And then see if it outperforms the market. I mean, because if we go into a bullish stock market, it's going to perform well, okay? But it may actually outperform the market from the simple thesis that women like to buy things, lots of things. That means, it's a really good time too, because Amazon, 100% you have to put Amazon in the Becky Index. Amazon is or has come off of the all-time low to the all-time high 50% retracement level, which is it was at 94.46. I didn't get the setup I wanted. I wanted to catch it on a pullback to like maybe that 87.5. Didn't give it to me. Earnings though may have given us a second shot right here. So I got to think about this. Maybe the way I'll execute this is in the Becky Index. I might do it that way. TIP ETF. What's a TIP ETF? Is it just the tip? TIPS bond ETF. Okay. Can you tell me why I would want TIPS over TLT? They're both iShares, but TIPS. Hold on. Let's do TIP and see what it is. Profile. This fund will invest at least 80% of its assets in the component securities of the underlying index and will invest like 90% in U.S. Treasury securities. The index includes all publicly issued U.S. Treasury inflation protected, Treasury inflation protected securities that have at least 1 year. Okay, so this is like inflation relative bonds. Okay. Oh, this is tips. This is the Treasury bonds. Well, I would put your money into an actual tip Treasury bond rather than the ETF. But I guess this is a way that you can put into the ETF instead. I'm not sure how to value this. I think it's just going to go up with bonds, obviously, so yeah, because they change on a regular basis, those Treasury inflation tied bonds. I'm not sure. My thoughts are, if I'm going to trade an instrument, it's going to be TLT because you can find options on it. If I'm going to be looking at tips, I'm just going to get a tip itself, and then just get the interest on that bond. Actually, new I-bonds rate comes out in April. Okay. AMT, American Tower Corp. So that is hitting a resistance. $230 is, that's even a really good inflection level here from 2022. I would say, yeah, that's failing to break out. That's looking a lot like, we were looking at oil earlier where it came up to that 50%, tested it twice. That's looking pretty bearish, actually. You got earnings coming up in later February. It may actually not be too late. Let me look at implied volatility. Yeah, actually, implied volatility is not super low, but it's low. It's below average. So you have two pullbacks here. I would, because I'm me, try to maybe get one little pullback, like maybe a pullback to 226 this week. And then that could be a good opportunity to maybe get a little bit of bearish exposure in your portfolio with a put on AMT. Apparently, big company investing in Africa. Well, they're probably investing in Africa because it's too expensive to buy land in the United States. Africa could be an up-and-coming region. It could be. It's just not been historically. So we'll see. China's investing in Africa a lot. They're building a lot of stuff there. They definitely need a lot more connectivity. But you know what? They're going to be in competition with, Starlink here pretty soon. Oh, are they making... Oh, yeah, desert for solar panels. Definitely. But the problem is you can't get electricity. You can't make electricity cross oceans very easily. So, all right. Anything else you guys will look at? All right, so I'm actually going to dedicate a whole video to looking at the Case-Shiller Index. Okay? But, hold on. Where did my old stuff go? Okay, hold on. Oh, is this... All right, let me do some backups. There we go. Okay, I thought I lost it. So all these lines are what I drew earlier this week. Okay, and fortunately, just like a Word document, you can Control Z and undo your deletes and things like that. So the reason I wanted to keep this was because in TradingView, hold on, let me just do this. Object tree. Can I hide all? I wish that I could hide all and show all. One second. Hey, TradingView, let me save. Create a group of drawings. Can we do Control All? One second. Create a group of... No. Wait. Oh, yeah. Look at that. Hold on. Bear with me. So we can do this. Arrow, trend line. Okay, no, I want that. Okay, so the reason I did these back here is because I wanted to take the Case-Shiller index back to its inception. Let me pull it up here. So Case-Shiller home price index. This is the National Home Price Index. If you're looking at real estate, that's probably the best thing you have to go on. Yes, all real estate is local, but this is the broader trend. So let's take a look here. So the data for us on the Fed website, goes back to 1987. Okay, yeah, a little recession here back in 1990, which I was not alive enough to know what caused it or why, but tiny in the grand scheme of things. There was a little recession in 2001. .com blew up. A lot of people lost a lot of money, but didn't really change home prices. So the last swing low from a recession that you had was March of 1991 in home prices, which is very small compared to, of course, 2006 to 2012. What I found interesting about doing that analysis, let me just bring this up here, is if I draw that low, and I sort of hacked it in here with this line right here, you can actually do this. You can go back in time on a chart and draw lines and things like that, because the chart actually starts here in 2000. From that low of April 1991 to the high of 2006, the national home price did a pullback to a 50% retracement. And so I, of course, was not looking at that at the time, nor was anyone else. I bought my first house in 2009, so I definitely didn't catch the bottom. But I don't even remember this back that far, but yeah, 2012 was the bottom of house prices. But most people assume that house prices would never recover because people assume what is going on in the current year is going to continue on indefinitely. Well, that's not the case. And so what I wanted to ask myself is this: what is a good home price appreciation historically? Like, what is normal? What is normal for home prices to go up? That way I can evaluate what is abnormal. And then if we assume that things revert to a historical mean reversion, where then is the mean? Where should it be for home prices? Because we're getting a little pullback. We're getting a pullback on the Case-Shiller index from the high that we set in June of 2022 down to now, basically. So what is a fair appreciation rate? Well, let's do a little bit of research to answer that question. So how much on average do home prices beat inflation? Let's see what Google says. All right, any time estimate. We found that home prices have rapidly increased over the past 5 decades, eclipsing the inflation rate. That's since 1970. There is a number I'm looking here. So basically in January, year over year, home prices rose 8.6%. Very close to inflation. Very close to inflation. But where's the number I'm looking? Where's that statistic I was looking at? I don't want to quote it wrong, but I know in my head, property prices more increase. There is a number historically. Okay. I'll prepare this for my video. I'll find the number. I'll maybe even do the research myself, as a matter of fact. But essentially, how home prices beat inflation by about 1%. So real estate is better than just having cash maybe in a savings account. And home prices do appreciate, but over 100 years, 100-year time span, if you average in everything together, generally they appreciate at about 1% above inflation. So you do beat inflation, okay? So what I want to do to expand upon my analysis, again, this is my analysis because I'm trying to make a decision on when to buy my next real estate property. I don't want to jump into it now because the numbers simply don't make sense. The numbers don't make sense because in the Atlanta area where I would be looking, it may be different across the country, you can get about a 5.5% return on like a cash buy, maybe 6%, but really more like under 6 if you include in taxes. That's really below that benchmark that real estate investors want to look for, which is 6 to 10% cash flow from it. Factor in your hassle of having to find tenants, doing maintenance. It doesn't make sense when I can go and take my cash and I can put it in a savings account for 4%. It doesn't make sense. Right now, with the current prices of houses versus what you can get for like a rental income, does not make sense as an investment. It just doesn't. Now, if you are moving and you want to have a home to live in as opposed to renting, buy a house. Still going to be a pretty good idea for you. But as an investor, I'm trying to use what I know about charts, mean reversion, interest rates, and inflation to answer the question for myself. And so what I started looking at was, if I make the assumption that from the period of 2012 up until we finally got up to the 2006 high, it took 6 years to go from the low to the high, recover the 2008 crash. This rate of appreciation looks pretty standard. You know, this over the course of, 2011 up to here, home prices rose by about 47% over the course of 6 years. That makes sense. That seems fair. Maybe it's a little high, but it seems fair. And so where does that get out of whack? Well, you can see that continued through 2018, 2019, and into 2020. But then when the Fed kicked up the money printers, dropped interest rates down, what do you see happen? You see things start to look like a little bit of a hockey stick. I posted this chart, the Case-Shiller, without any additional information into the chat on my Discord, which, by the way, click the link below and join. I want you to come hang out with me. I don't charge you for it. But this is the kind of stuff that I like to discuss with my community, because I'm trying to make decisions myself. And I want to hear feedback from professionals that maybe know more than I do. And so, and we have a lot of real estate investors. We're all trying to answer this question, but this is how I'm approaching it. I asked them, what do you think this chart is? What do you think a chart that looks like this is? And I didn't give the title. And they said, well, that looks like a cryptocurrency. Well, that's home prices. And yes, they've gone up a lot. And they've definitely broken that trend of what I can say was normal. And we know why. We know it's because inflation kicked up, the money printer was on, people were trying to capture that low interest rate. I captured a 3% mortgage. I didn't get the 2.75 like some people brag about, but I got a 3% mortgage in 2021, and I'm happy that I got it. But as things carried on, people really wanted to lock in that rate, and they didn't care what price they got. And it was actually rational, because now you see what a difference a monthly payment is with a 3% interest rate versus a 6%. It's huge. It's like almost $1,000 a month, and depending on the home price. Well, we definitely got outside of normal. So what brings us back to normal? What home price index? What can I look for normal? And well, if we assume that the mean was that normal appreciation, then we have to pull back at some point in the near future to this region right here. I mean, home prices are going to keep going up because inflation is going to keep going up as well. But we're way, way, way beyond where it should be. Now, anything can happen. Inflation could do all kinds of fuddy stuff and go, but this is what I'm looking at. So this is my best. I'm not going to hedge it. This is what I'm looking at. I'm going to wait until these things happen. So let me bring this back up here. So essentially, one analysis I'd be looking at is from the low of 2012 to the high that we set in June, the 50% pullback of the home price index would put us to about 226. That would be, I would say, a recession type of event. We would pull back, which is about 24% from the current price we are right now. If things stay normal, if we don't go into a recession and we pull back to what should be normal appreciation, then we should intersect this regression line sometime at about a 9% pullback. Let's call it 10%. A 10% from the current price valuations. And at that point, we're going to come down into a range. And where that's going to put us, if you sort of extrapolate out, the time that it takes for these kind of real estate cycles to happen, which is about a generation, incidentally, about 12 to 15 years, then possibly mid to late 2024, I would be looking for a 10% pullback in home prices from the current level. Now, if I really wanted to deal, if I really wanted to be patient, and I really thought we were going into a recession, then I would look for something all the way out to the end of the decade for a pullback to a much lower level, a 25% pullback. But this chart is what I'm going to be using for my decisions going forward in real estate investing. Basically, it tells me to wait. Maybe I'll miss some opportunity, but like I said, the numbers on real estate right now don't make sense. You can put your cash into a risk-free savings account and not have to deal with tenants, not have to change out leaky faucets, and earn 1% less than you would on real estate. Yeah, you get it from real estate appreciation, but you know what? Let's keep our lives simple. And right now, that's not it. So, wanted to put that in for everyone's benefit. It's going to be for mine, but hopefully people can find it useful. And that's going to be the discussion topic for today. If you guys have any questions, go ahead and post them in the chat. You got like about a minute because we're an hour and a half in and I need to take a break. But I really appreciate you guys hanging out and listening, and I hope you get some value out of it because that's why I do this. So, main crypto is XRD for the next bull cycle. XRD. Is that the thing that you were telling me about the other day? What is XRD? Radix. Okay. Looks like it's trading on Bitfinex. Oh, look at that. It's a little bit of a standard pump and dump, but with a potential recovery over the daily Ichimoku. Well, everything's breaking out the daily starting on January. This really started taking off, it looks like, after Bitcoin started taking off. Started taking off Saturday, January the 28th. Cool. I see something I like. Hold on. So on this leg down, boom to boom, you had, let's go down to the 4 hour. Looks like over the last week, you had a pullback to 0.5 cents and hold. It's good. Let's measure the actual run up itself. So how I look at pumps is this. I'm going to look at the pump itself, and I'm going to see, is this going to succeed or fail? Let's do a quick recap. So this recent pump in December, what happened? There's only a daily chart. So boom to boom, dig down a little bit, 2 hour. You have this pump, pulls up, pulls back to the 50%. Does it hold it? No. Done. Get out and wait. Pulls back, holds it as resistance. Boom. That pump didn't work. Okay? So what do you look for? On this one, start of the pump. Nope. to the high. So your pullback level is going to be about 0.4 cents 8. Now, if you come up and break this high, you're definitely good to go. Pull back to here. That's your pullback level. You're good to go. Those are the if-then statements for this. So I like it. I like it that it's didn't do a full pullback all the way and is trying to make a run for the high. But watch it here going into the weekend. All right. XRD is a DLT. Awesome. What's a DRT? You know, Ed, you may be right, but how does that make me money? How does that make my life better? How does that help me find opportunity? If we're all screwed, then who cares? But I'll tell you something. I really enjoy my chemical sugar water, which is not sugar, and like having where's my phone? A magical glowing rectangle that I can access all the world's information that uses magical waves to connect me to sound. I enjoy all these nice things that these people have provided to me. I hope they keep doing it. And if they want to run the world, it sounds like a job that I don't want. So what am I going to do about it? Except trade. And look for opportunity. I've got a lot of friends that try to convince me the same thing. So I know what you're talking about. I'm not being totally sarcastic. That's the same thing I tell them. Maybe it's the truth, but what can I do about it? I'm just going to try to be happy. All right. Yeah, I call them the lizard people, actually. The lizard people are what run the world. They're just in humans' clothing. Every time that I'm in a trade and it stops me out, I say the lizard people got me. They took my order. Damn those lizard people. Damn those lizards. All right, guys. I digress. Thank you for hanging out this weekend. Bug me to make a video about the real estate thing, somebody. No, you don't. I'll do it. I'll do it. Have a good weekend. Well, guys, we'll see you next Friday. I do this every Friday, 4 p.m. Link below. Discord. Just want to hang out with you. Don't want your money. Just want to help you make some. So trade wisely. See you guys next time.